All right, let's maybe get a little bit more discreetly trading bearish with Gareth Soloway back with us from InTheMoneyStocks.com. He's a chief market strategist. Was waxing pretty cautious bearish last time we spoke, Gareth. The market broadly has strengthened since then. Bitcoin's been about flat. I know you were fading both BTC and some of the heavy tech stuff. So are you feeling like today might be the beginning of some vindication?
I do. I think that today is kind of a recognition that reality isn't as good as people are making it out to be. And you were just talking about how, again, we're seeing yields kind of dropping as well as other things that usually signal a move up in markets, but instead we're seeing down. And what we're really seeing here is a realization that the economy may be weakening. And I say that because with Tesla, it was margins. Margins are not great. That means they're having to cut prices to get buyers in the door. With Netflix, they beat on revenue, but they beat on subscribers, but their revenue missed, which means they're making less money per user or per subscriber. Both of those are signaling that the economy is not as good as everyone thinks it is. And everyone's stuck on this Goldilocks, like somehow magically for the first time ever, the Fed's going to engineer this perfect landing. It's not going to happen.
So with bonds selling off today after good jobless claims, it sounds like you're attributing the weakness in the stocks, though, more to the underlying earnings than like some bond-driven catalysts circa 2022.
Yeah, I am. I definitely am attributing it to more of the underlying economics with earnings. I think it really kind of freaks people out. Here we had the first two big tech stocks to report, almost $1 trillion one in Tesla, and Netflix is Netflix, and both earnings reports are seeing almost a 10% decline in stocks, which had, by the way, gone parabolic. So they would have had to have reported an amazing quarter to actually justify where they are. But money has been rushing in. Money hasn't been asking questions. It's just been piling in. And that's usually a recipe for disaster, and it usually marks tops in markets.
Can you give me an idea? We love the details as traders on how to approach these moments of potential trend reversal. As someone who's been looking for this downdraft, how are you going about holding, taking profits? What's the approach? Do you sell upside in these companies, buy downside, hold for how long? I mean, what's kind of the right way to know if this is a real reversal and how to take part in it?
So the way a technical trader works is we now take the highs on Netflix, the high on the NASDAQ 100, the high on Tesla, and that's our level to trade against. So right now, that is the high, that is the pivot top until proven otherwise. And so basically what I would do is I'd look to buy pullbacks into major technical support, but just quickly, and then short as we move up towards those levels. If we get above those levels, then as a technician, you have to say, okay, I was wrong, and we're going to go higher. But I'm going to guess, considering the volume, considering what we're seeing in the economic data, I do think that we're very close to a major reversal, and maybe look back on this and saying this was the rally which almost touched all-time highs, and now we're going to head back down. I think October lows will be seen by 2024.
Wow. That's a pretty big call, Gareth. We're talking the October lows, right? Like the lows of last year's bear market, 3,500 for the S&P?
Yeah, and again, I think people have to recognize that, you look at the economic data. The economic data that's been strong has been jobs, which you got to give credit for. But I think jobs directly is related to COVID and how hard it was to find people to work. So employers are very hesitant to fire people because of what they experienced during COVID. Once the economy slips into recession, which I do think end of year, early next year happens, that will start to take over. We're even seeing it in technology. And then you look at things like consumer confidence, which has been strong, but that again is directly related to the stock market. When people see their 401ks spiking, they feel better. They just do. Other than that, factory production numbers, retail sales, it's all been atrocious and going lower. And you also see M2 money supply declining, which has a direct correlation to market action historically. So when M2, when money in the system declines, stock markets usually follow.
Okay. All right, there it is. That's the stock part. Now let's talk BTC. I mean, at this point, I'm almost thinking like the stock trade is more exciting. What is going on with this thing, Gareth? It's just stuck. Can't go up, can't go down. I'm sure the coiners are freaking out because they thought the ETF proposal from BlackRock was a gift from the market gods. And we're looking at the same level since like our last three interviews.
Yeah, who would have thought? Yeah, who would have thought Bitcoin would be the quieter of the indices when or the assets when you look at stocks and crypto? But I think again, what you have is the hopium of the ETF, the spot ETF from BlackRock. You have potential for big money to come in, which is kind of keeping buyers setting up here. But the other side of the coin is that you haven't seen Bitcoin rallying with all these technology stocks, which in 2021 it did. If you saw Nvidia up 5%, Bitcoin would be up 10% on that day. So that's a concern to me, and I continue to be watching this 30,000 to 31,000 level, which we've been stuck in now for a month. If we are able to break above 31 and hold, I think we go to 35 at least. But if we break below and hold 30,000, there's a quick drop to 26,000 to 27,000 on the horizon.
All right, that's not too far from where we're at. So you're kind of thinking that it's got a fracture before it really breaks.
Yeah. So one of the things I'm looking at is this: is that my worst case, and we talked about this the last few times, is that in the worst case scenario for me, Bitcoin goes to 12,000, maybe 9,000. The only way that happens is if you do see a major drop in the stock market, where you see a run from risk assets. So if, let's say, the Nasdaq were to go back to October lows or lower over the next 12 months, to me that would be a likely scenario where asset or money would be running from Bitcoin as well, and you could see those lows. Otherwise, I think if we just kind of go steady and just chop around here in the stock market, Bitcoin likely holds above 20,000 and eventually breaks higher due to the fact that big money will come in when that spot ETF is approved.
There it is. All right. Thanks, Gareth, for the update on the process. Sticking
Thank you.
with the bearish positioning. Thanks, Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com.